everyone? So right now my profile is at 17,000. Last time you guys saw was at 14,000. That last video was uploaded 2 weeks ago. I'm back, and currently I have gains of $976. That's about 8% starting off this Monday morning. Last week, funny thing is, I was actually up between Monday to Wednesday. I was actually up 11% on my portfolio, and the week just ended off bad in the market, and it brought me down to about 8%. So being up, one of the main reasons why I was up 11% was I just at 14,000 I just made a deposit, and I just bought more of the companies that I held at a lower price, and it just helped out and brought it up to around 11%, and now it's back down to 8%. $976 of gains is still good. Currently, right now, 8%. And some of my holdings, and I just added a new holding actually after doing some research. That holding is Best Buy. Best Buy, to me, is very undervalued right now. Currently at an 8.2 PE ratio and a 3.2 dividend yield. I bought in around $96. And before I bought in, it was at around 99. So even then, I thought it was still a good price. But then it dropped to 96, and I said, I might as well jump in. And I was actually up. Like I said, beginning of the week of last week, I was actually up $60. And then during the low end of the week, it dropped down, and now we're back up. It dropped down to about $60. I was negative 60, something like that. So basically, all that I gained was all lost. And then now it's climbing back up slowly but surely. Now it's down 26, but it's still a good time to buy for me. So yeah, I'm just gonna keep buying into the company, and Best Buy. To me, I think they're undervalued, and I think it's a good company and direction that they're going in. One of the main reasons that got me into Best Buy, and I used a couple resources to help me make this decision to have Best Buy into my portfolio. One of the key reasons are, and to me, which is so important that a lot of investors sleep on, that they don't realize that they're losing money on this end, is when a company issues more shares, the investor is losing a lot more money. And you won't see that. That's when a company decides to add more income besides taking on debt. So they take it on by adding more shares so more investors can buy in. But you're being diluted. And to me, that's not a good thing. So I'm always looking at share buybacks or share repurchases or where they are when it comes to their share buyback plan. And Best Buy has a upcoming 1.5 billion share repurchase expected in fiscal year 23, following record levels in fiscal year 22. So that means they're continuing to buy back shares, which is very important to me as a shareholder. And also, of course, we know they have that dividend yield. So they raised their quarterly dividend up 26% to 88 cents per share. And to me, that's a plus. I mean, 26% increase on your dividends while continuing to repurchase shares. That is a plus for me. And right now, as Best Buy, you may say, well, they're competing against Amazon, competing against all these other companies. But when you think of technology and where you want to go shop, I think Best Buy is pretty like the top five, if not the main one, where you want to purchase those electronics as a consumer going into a store. And one of the things I noticed while reading their reports is they're bringing in a workout space. So they're bringing in workout equipment. As you see when you go to a Best Buy, you see they have their cell phone stands, they have these electronic stands. They're gonna make room, at least some stores, for a workout, and I think that will increase sales as more people look to purchase more gym equipment, things of that nature. So their allocation strategy is still the same as what it says in this report. So their goals is 4 steps. They reinvest the business to drive growth, pursue partnerships, and M&A to support our strategy. continue to be a premium dividend player. They really want to be a dividend player. They want to grow that dividend over time and consistently pay it. And also they want to return free cash flow over time through share repurchases. So those are important goals as an investor, right? They want to grow their business. They know times are changing and they're with the technology scene. So as technology grows, Best Buy will look to gain those products and sell them in store, right? They're going to continue to be a dividend player, which is very important as I continue to buy more shares and grow with that. And they want to issue, more cash flow through repurchase of the buybacks. Very important. I just look for more undervalued companies so I can continue to add and collect the growth with that. And I definitely believe Best Buy is that one of those companies that I would look to for 5 to 10 year return. Do I think it will be here for a while? Yes, I do. One of my main reasons, if I haven't explained it before, of why I call my portfolio growth slash dividend, one of the main reasons because I can't really think of much of a different name. And two, you may notice in my profile where I have companies that do not pay dividends. Google, Facebook, Netflix, who else? Amazon, right? I have companies like that that do not pay dividends, but I don't want to miss out on their growth, right? I don't want to, I can easily get into an ETF or whatever that holds these companies, but I just want to hold them myself because I want to collect more of the growth with those companies. So as I collect the growth of these companies, I will take some of the gains and move them into my dividend stocks. That is the goal. So I have myself contributing to my dividend stocks, and then I have the growth of other companies like Amazon, Microsoft, Facebook, Netflix, other companies like that that will also feed into the dividend stocks that I have on my portfolio. Even with Amazon, I'm already up 14% on that. I'm just going to hold off a little bit on taking the gains from that and moving on to a different portfolio, at least maybe after the split that they have coming up. I'll probably see where it is by then. So up 20% on Facebook and different things of that nature. So I'll definitely take some gains from those type of companies that don't pay dividend and move them in. Simple, easy as that. And I think that's a good strategy for a lot of investors where they don't want to miss out on gains from other companies that don't pay dividends, but they also want to get dividend income as well. So I think it's a great strategy, and it's just something that I'm gonna look to do for the time being until I don't know how my mind is gonna be a year from now when it comes to investing. Not sure what's gonna happen, but we'll see. And that's just a plan for now. And right now, I only got $22 of dividend coming in earned so far, which is, to me, is pretty good. My monthly income pie with coming in with $10. My real estate, which only holds Vici, came in with $8. Food and drink, $1.92. Finance, $1.47. And consumer, 80 cents. So over time, as I just started this portfolio about a month ago, so the dividends are going to be coming in little by little. But over time, as I add more money, this will definitely go up. And honestly, let me know what you guys think. I really want to grow, and my plan is just with each deposit that I put in, I will just put in maybe 1,000 every each deposit I put in, and go into my monthly income. I always want to have just money go directly in there because I want this to just overcome my source of income, primary source of income, which is my job, and I just want to take care of expenses literally just from this pie alone. So with that being said, what do you guys think? Should I just continue directly, just pour into this monthly income, have a set amount, no matter what, just put it in from my paycheck, whatever, direct deposit, and put it straight into this one, and then anything else I can kind of gather and put in through here. So that's something that I've been just thinking about because I just want my expenses to be covered by just this portfolio. And so with that being said, there's my pie, and hope you guys like it. Please like, subscribe, everything, all of that nature.